Hello everybody. In this video, I'm going to talk about how I pick my stocks. This has been requested multiple times recently, so I know that a lot of people want me to speak on this topic. Let's get something out of the way first. I hope you guys aren't thinking that I have some magic powers and that I know how to tell the future and I know which stocks are going to go up or down this year. There's nobody who can tell the future. And if someone suggests that they have some way of knowing whether a stock will go up or down, you better run far away from them because no one has the ability to tell the future. And even if people know whether a stock will go up or down, they don't know to what extent it will go up or down and what the timeline is, whether it's going to go up a year from now, 3 years from now, next week. No one can tell with 100% certainty what will happen in the future. Even if we look at things like UVXY, which everyone understands goes down over time, nobody knows, again, to what extent it's going to go down this year and the timeline. When is it going to go down? When is it going to go up? No one knows the timing of when it will go down or up. All I'm going to explain in this video is how I personally pick my stocks and for what purpose. If you're looking for someone to tell you exactly which stocks are going to go up within the next year or which stocks are going to go down this year or the next year or the year after that, I'm sorry, but I don't know that information. There's no possible way for me to tell what's going to happen in the future. All I'm going to talk about in this video is how I personally choose the stocks I invest in. And that's based on different purposes that I want to achieve. First, let's talk about stocks that I like owning long term, stocks that I want to buy and hold for many, many years. For me personally, the biggest factor that I take into account is the goods or services that the company provides. Do I understand the goods and services that the company provides, and do I see an appeal for those goods and services? If we look at Amazon as an example, I can clearly see what type of services they are providing, and I can see the appeal of those services, why people would be interested in using them, why there's such a high demand for those type of services. If we look at a company like Disney, I can tell that it provides entertainment to people through its theme parks and streaming and movies, and I can see from first-person experience why people have such high demand for their products and services. I live very close to a Disney theme park, which I go to very often, so I know the people who go there, what they're interested in, the way that they think, the type of merchandise that they're interested in, their buying habits. So I'm able to see, at least from a local perspective, what the demand for their products and services are, and what type of people are part of their target audience and how they think. I'm also part of some online communities, such as Facebook groups, full of people who openly talk about their opinions on Amazon, Disney, what they find appealing, what they find unappealing about the products and services. They talk about new releases and their opinions of them. So I have a good understanding of what people look for, what they like and don't like in regards to the products and services offered by these companies. That's the qualitative side. Now, let's talk about the quantitative side. For my quantitative research on these companies, I usually pay attention to their earnings reports. In their earnings reports, these companies try to give a good picture of how well they are doing as a company. This could include information such as how much revenue they made that quarter, what parts of their business are making what kind of revenue, if they have any subscriber-based services. Are the number of subscribers increasing or decreasing? What is the average amount of money that their customers are spending? If they're working on any new projects or ideas that are currently in the pipeline. And one of the most important things that a company talks about during their earnings is their forward guidance, or how well do they expect to do moving forward. For example, SoFi in their latest earnings report talked about where they expect their EPS to be within a couple years from now. I take a look at all of this information, and if everything looks good to me, and I believe that the company has a bright future ahead of them, then I look at the current stock price. and ask myself, do I feel comfortable owning the shares at the current price? And if I do, then I buy some shares and plan to hold them long term. Right now, I'm selling covered calls on all of the stocks that I own. However, for the stocks that I plan to hold for a long time, I usually pick a strike price that's well above the current price. And as the expiration date approaches, if I see that the stock price is getting closer and closer to the strike price that I chose, then I look at rolling out the covered call to a further expiration date and a higher strike price. That way, my shares will not get called away and I get to keep my shares while still having a covered call position. Next, let's talk about stocks that I do not plan to hold long term. However, I do plan to hold them for the next couple months and collect premium from them. For these type of stocks, I do not have to look for companies that I believe will grow exponentially in the next couple of years, but rather companies that are fairly functional and safe, however, not too safe because for the companies that are very safe, they do not offer very high covered call premiums. I usually try to look for companies that are not too volatile, but also not too safe. But somewhere in the middle, there's a sweet spot to where I don't have to worry too much, but I can still collect that nice premium. Since my objective for these stocks is to simply collect the premium, I usually pick a strike price that's at the money, or sometimes, when I'm feeling a little bit doubtful, I even pick strike prices that are already in the money. That will allow me some room in case the stock price goes down over time before expiration. Lastly, let's talk about my speculative plays. For my speculative plays, I take a look at companies that are not currently in their ideal state. And then I think about what new products or services or business practices could the company implement in order to grow from here, and what does their ideal state look like? And do I see the company having some way of bridging the gap between where they're currently at and where their ideal state is? For example, SoFi currently does not offer level 1 options trading, so I can see that as a gap that they can bridge. For these speculative stocks, I usually buy shares and then pick a strike price for my covered calls that is above the current price, and hope for the best. And of course, my positions are not set in stone. If any news comes out or if anything were to happen that would change my confidence in a position, then I can readjust as I see necessary. So that has been a general overview of how I personally pick my stocks. Again, please don't take this the wrong way. Nobody can tell the future, so please don't think that there's any way I or anyone else can tell you what stocks are going to be winning stocks and which stocks are going to be the losers. I hope this video gave everyone a better understanding of how I personally pick stocks. Thank you so much for watching, and I'll see you guys next time. Bye.